declared the central bank's bad loan resolution framework, which came into effect from the 12th of February 2018, as unconstitutional. This has come to be known as the Feb 12th Circular. About 50 petitions were filed by power, shipping, sugar, and many other companies challenging the circular. Lata.
Yep. The central bank had replaced all frameworks for bad loan resolution with this one circular, forcing banks to recognize defaults by large companies within a single day and find a resolution plan within 180 days of default. It was applicable to loans over 2,000 crore rupees, and failure to find a resolution plan would mean the initiation of bankruptcy proceedings.
Well, good evening. Thanks very much for joining us on the special edition of Eye on India. Over the next 30 minutes, we will discuss how this verdict will impact banks and debt-ridden companies that are currently under resolution. First up, let's go across to our colleague Ashmit Kumar, who's been tracking what transpired in court. The judgment is now out. Ashmit, take us through the details and the fine print of the order. What does it say and what could it imply?
Well, what's interesting to begin with is that a large body of arguments have been presented before the apex court, essentially boiled down to one argument, which is one-size-fits-all approach is being advocated by the apex court. And that is one argument which in fact summarized how the power sector was aggrieved, how the textile space, how various other infrastructure companies, sugar companies were aggrieved, that the sectoral issues were not being looked into, that the RBI was not sensitive towards individual companies, their needs, their requirements, how the issues plaguing the sector or the company in question could be extraneous to the management and the promoters of the company, and that was something not considered. Now, this entire set of argument has not been considered by the apex court. Instead, what the Supreme Court has done, this order stretches in, it's not very long, stretches in about 85 pages. What the apex court does is that it dedicates those 85 pages towards a discussion of the RBI's powers under 1, the Banking Regulation Act, and 2, the RBI Act in itself. Now, there are various sections, 35A, 35AA, 35AB, and a discussion on these various sections reveals, finally, the apex court concludes that the RBI, only under very, very specific circumstances, subject to a very specific set of criteria, has the power to push a particular company into the IBC, and that given as how it is very specific, that provision, and given that the various conditions with respect to that section, that power of the RBI have not been satisfied, broadly the apex court has held that this circular is largely unconstitutional. Having said that, the apex court also throws some light on the way forward. The Supreme Court clearly remarks as a part of this judgment that as far as any matter that might have been, any company that might have been proceeded against under this circular, all those proceedings under the IBC or otherwise will stand quashed as of today. So some clarity coming in, but of course it begs the larger question, what about the resolution framework going forward, and what does this mean for the lenders?
Absolutely. In fact, Finance Minister Arun Jaitley commenting on this, saying that it is now up to the RBI to decide what the resolution framework should be going forward. Just to pick up on what Ashmit was saying, the Supreme Court judgment on Section 35A very clearly says direction by the RBI to lenders to push a company under IBC will require authorization from the government. Without central government authorization, the RBI has no power to push a company for resolution under the IBC. Well, joining us now to discuss this further, Ashok Khurana, Director General of the Association of Power Producers, litigants in this matter, Abhizar Devanji, partner at EY, R.K. Bakshi, former Executive Director of Bank of Baroda, R. Gandhi, the former Deputy Governor of the Reserve Bank of India. We'll also be joined by Suharsh Sinha, Senior Advocate at AZBN Partners, in just a bit. Mr. Gandhi, I want to start by asking you, because this is a massive setback as far as the Reserve Bank of India is concerned. What do you see now, sir, as the way forward, given what the Supreme Court has said in its judgment?
Yeah, it is rather unfortunate that the things have come to this pass. And naturally, we would have to go through the complete judgment, because what next to be done, that we have to be carefully reading that. Just now, what has been mentioned, that all the current cases where the resolution process have been started under IBC, they stand quashed. I didn't get it correctly.
Yes, all actions taken under the said circular, which is the Feb 12 circular, including actions by which the insolvency code has been triggered, must fall along with the said circular. That is what the Supreme Court says.
Oh, that puts the clock back by several months. So by Reserve Bank, well, yeah, and the one point is true, that Reserve Bank cannot give such direction. That's what the court has said. Fine. But the banks on their own can definitely come to the conclusion that this NPA is unrecoverable. So we want to have a resolution under the IBC process. So as a voluntary process, instead of being mandated or directed by the Reserve Bank, I think that will be well in order. That's my immediate reaction to that. So that would mean that earlier the banks took the position that it is Reserve Bank which is mandating us. That is why we are going to resolution and then onward to bankruptcy. Now, on their own, the creditors should be taking such a decision. In case they come to that kind of conclusion, certainly IBC process can be followed. That would be my understanding.
The Feb 12 circular also says that if a borrower does not pay on due date, it is a default, and banks will have to report it on the following Friday to the CRILIC and start taking revamping actions. It also says that an NPA will be upgraded to standard status only if all overdues are cleared and 20% of the principal amount is repaid. There are lots of provisions in February 12 circular which has got nothing to do with IBC. So does only the IBC related provisions fall, or does the circular fall? That is my question. Abhizar Devanji, your reply.
If you read what the law says, or what the judgment says, and I read, in view of the declaration by the court, the impugned circular is ultra-virus to Section 35AA of the Banking Regulation Act. So effectively what it says here, it doesn't say that the provisions of the circular pertaining to IBC have been withdrawn. It says the impugned circular is ultra-virus.
Okay. Well, on that point, let me get the lawyer in. Suharsh Sinha of AZB is with us. Suharsh, how would a Reserve Bank lawyer interpret this? It says that RBI does not have the power to direct banks to take companies to the IBC, and cases which have been taken to the IBC under this circular fall. But there are lots of provisions in the February 12th circular, like specified period, re-upgrading from NPA to standard, one-day default, which have nothing to do with IBC. What is your interpretation? Does any part of the circular stand? And if it doesn't, as Abhizar says, then does the Reserve Bank have the power to go and seek a review, whether other parts hold?
Thank you for the opportunity, Lata. So I think there are three distinct parts to the Feb 12 circular. First part is it talks about information sharing. To the extent banks are sitting on non-performing assets, they need to submit that to CRILIC on a weekly basis or a monthly basis. That's the first part, which is information sharing. Second part is restructuring and asset classification. And third part is that in the event certain accounts have not been resolved within 6 months, then you need to file IBC in regard to those. The Feb 12 circular relies on three sections of the Banking Regulation Act, 35AA, 35AB, and Section 45. 35AA is the section which authorizes the central government to issue directions to the RBI to file IBC against specific companies. The Supreme Court has said that the Feb 12 circular is ultra-virus of 35AA. So to the extent the Feb 12 circular talks about filing IBC against certain cases, Feb 12 circular is only ultra-virus, that part. And the reason Supreme Court held that is because it says 35AA prescribes a certain mechanism for filing IBC against companies. That mechanism is A, the central government must send, have an order to RBI, and secondly, it should be in respect of specific defaults. Now, if you recall the first 12 cases and the next 28 cases, those were specific cases. Whereas Feb 12 is a more generic circular which applies to all companies across the board, which are more than 2,000 crore. So it's a very difficult interpretation to take, because you cannot have a moth-eaten circular. The circular was supposed to be a holistic circular, but I would hazard to say that the part of the circular which is ultra-virus 35AA falls away, but the part of the circular which is 35AB, which relates to restructuring and asset classification and information sharing, which is Section 45L of the Banking Regulation Act, those should stay. However, because it is so intermingled, you can't really have the doctrine of severability. You cannot say that these 5 sections apply and these 5 don't apply. So I think what is required is probably some sort of a clarification by the Reserve Bank, or possibly a review for Supreme Court to say that it's only a certain part of the circular which falls away and the remaining parts stay.
What happens now to a case, for instance, like Jet Airways, which is currently in the process of resolution under the Feb 12 circular? Abhizar, I'll start by asking you.
So, one is that if you look at resolutions under Feb 12 circular, specific aspects would have to be looked into and need clarification. So take Jet Airways, for example. I think one issue would be if the conversion of shares happens at 1 rupee a share, which is a specific condition in the Feb 12 circular. Those will get impacted. But if you look at the general reschedulement of debt, for example, elongating of periods of debt, or putting in a new debt, though the circular again clarifies the fact that any new debt put is not an NPA, which is only a clarification under the Feb 12 circular.
Yes.
So if you look at specific nuances of the Feb 12 circular, I think those will get impacted. But general restructuring, and there are many others like Jet Airways, where there is no conversion, where there is no fresh money, there will be no
basically you're saying status quo ante will prevail.
Absolutely. In normal restructuring cases, except for specific provisions of Section 12A, February 12 circular.
Okay, but I would again go back to asking Mr. Gandhi, you know, in such a situation where the judgment is clearly indicating that the RBI gets its right to direct banks to take cases to IBC only from 35AA, but it has all other powers to safeguard public interest and a bank's interest from 35A and 35AB. When that power is being acknowledged by the Supreme Court, Mr. Gandhi, would it not be natural for the Reserve Bank to seek a review to the Supreme Court that do my other parts of my circular stand? Will not be that logical?
Certainly, I agree with that point of view, because as others also explained, the February 12 circular has several provisions, and there are the provisions which you listed out that obviously do not come within the purview of Section 35AA. So it will be better for Reserve Bank to go to Supreme Court and ask for the review, and instead of entire circular being done, it can ask for specific provisions to be valid. That I would agree.
Circular is credit negative for banks. The circular had significantly tightened stressed loan recognition and resolution for large borrowers, but with voiding this may now have to be watered down. What does this mean for the banks? Mr. Bakshi, I'll start by asking you, and then I'll get the other panelists to comment.
Hello.
Mr. Bakshi, do you believe that this is credit negative for banks?
See, the rating agencies have got a particular perspective to look at things, and for their rating exercise, the more severe recovery regime is there. It is definitely better from their rating perspective. But I don't think practically...
Forget rating, sir. From a recovery and a resolution point of view, do you believe that this will water things down and you will have to start afresh?
No. I really don't think so. See, as it is, we have come to the conclusion that 35AA is the one part that is being talked about. And there are certain things in the circular which make it practically a bit difficult to execute. For example, now there is a 100% lender approval required. Even a 0.1% or 1% lender can hold the process back. And you have got only 180 days within which you should reach a conclusion for resolution. Otherwise, you have to refer it to NCLT. IBC itself provides for 66.6% for major approvals in the COC and all, and 90% even for withdrawal of the case from IBC. But this circular requires 100% within 180 days. That means practically no resolution or restructuring will be possible, even in the most genuine cases. And in that case, you refer it to the IBC, where the borrower may lose the company. Totally.
Mr. Khurana, I don't know if you were expecting this judgment, but what does this now mean as far as power companies are concerned? Where does this leave the problems that you have been plagued with?
See, let me first handle your first query, whether the RBI should seek clarification and the partial or the full circular. Now, as the reading goes, the full circular has been held to be ultra-vires. They may not have commented on other things. Now, RBI, to my mind, and we've been talking about it to everyone, what really should come up, and which FM has hinted, the RBI will have to now come up with a resolution process. So this circular had many impractical and harsh conditionalities, and one size fit all. Now it's an opportunity for RBI to discuss with bankers, discuss with affected party, and come out with a practical circular. If you recall, SBI chairman himself mentioned that 180 days and 100% conditionality was impractical. So therefore, now this Supreme Court judgment provides an opportunity to RBI to come up with a practical circular, because intention of ours and everyone is actually to make payment. But what we asking through SBI, SC, was give us an enabling environment to make payment. We want to make payment. You can't hold me responsible for systemic issues like no coal with me, no PPA with me, and DISCOMs not giving me money. As on today, about 40,000 crore liability of power sold is pending on DISCOMs. So RBI may be sector agnostic, but RBI cannot work in isolation. They need to discuss with MOP, MOC, everyone, and find an alternative, because no one wants these projects to be mothballed. You will need these projects in next about 18 months. So idea is how to preserve value, and with that, now RBI has an opportunity to discuss the matter and come up with a practical, implementable framework for resolution.
Let me come to all of our guests and get them to react to what we've heard from the Finance Minister. The Finance Minister reacting to the Supreme Court's verdict. Here's what he had to say, and then I'll get my panel to respond to that.
We are trying to get the judgment of the Supreme Court, which has struck down the 12th February RBI circular. We'll read it, and I'm sure the RBI will also now decide in the present conditions of the market as to what is to be done with the various aspects contained in that circular.
That's the Finance Minister reacting, saying that we will examine the order. But Suharsh, let me start by asking you, what is now the way forward? Each of the panelists now suggesting that the Reserve Bank will have to come up with a new resolution framework, one that is much more practical. What, to your mind, is the likely road ahead?
The larger point is that in the past few months, I mean, as a law firm, us and I'm sure all the other major law firms have had lots of deals happening on the back of the February circular, because promoters who are faced with a 6-month deadline or with the possibility that the RBI circular may be upheld have been coming onto the table, negotiating with fresh buyers, fresh acquirers and the banks to resolve the situation. So it has had a very positive impact on resolving debt. The mere fear that at this end of 6 months there could be a possible IBC action. So to the extent that threat has gone, I think it's certainly going to have a negative credit impact. The second point I'd like to make is the whole conflict between the RBI and the central government, because the Supreme Court has basically reinforced that it's only on the instructions of the central government that RBI can refer specific cases to IBC. Without such an instruction, the RBI cannot do it. So this, to a large extent, also goes in favor of the central government as to who really wears the pants between the central government and the RBI. These are 2 points I wanted to make. And the third point, very quickly, is on the merits of the February circular, whether it is rational, whether it is reasonable, whether an exemption should be given to the power sector and so on. The Supreme Court has been completely silent on it. But notably, the ASG has made a statement which says that the RBI should have taken into account the stress in the power sector. So the central government clearly is at odds with the RBI when it comes to relief to be given to the power sector. The last point I want to make is that both the SBI and REC had said that we need 6 more months for resolving the power sector. And this was back in September, and we are now in April. So those 6 months have already been given to the power sector, and we haven't seen much change on the ground. To come back to your first question, the question which you addressed to me, I think there needs to be a revised framework, because depending on how much of the February circular survives, given that it derives its powers under 3 different sections, and its powers have been held to be ultra vires only a specific section. Do the powers under the other 2 sections survive, or they fall away? I think it's a complex legal question. It's not a call which the RBI or the central government can really take. Either we scrap the circular altogether and come out with a fresh circular, or we get clarity from Supreme Court. Till then, I think it's difficult to really say which way the wind is blowing.
There are 2 or 3 options. As Suharsh said, it could seek a review from the Supreme Court and ask if only certain provisions of the circular be dropped. It could rewrite the entire circular and drop all reference to IBC. What do you think, if you wore the Reserve Bank's hat, what would the Reserve Bank do?
See, I also, just the previous speakers did one of the mention that this is not, it's such a complex judgment. It should not be interpreted by the Reserve Bank or the government. That the Reserve Bank should go before the Supreme Court and ask for clarification about the parts which are still, which can still be valid, and which part which is not valid. So that clarification, I think the Reserve Bank should go to the government. That is, to the Supreme Court. But I need to say something more in the sense that resolution framework by the Reserve Bank is not an absolute must. Banks are fully empowered to resolve any NPA cases and on their own, and they can proceed. The Reserve Bank schemes were required constantly by banks, and other interested parties were asking for Reserve Bank to come out with a framework because they wanted some kind of forbearance from Reserve Bank. So that is why Reserve Bank had to come out with the earlier so many schemes like that 525, SAAA, S3, all those kind of things, and finally this February 12 circular. So even if Reserve Bank does not bring a framework, resolution framework, still resolution can be undertaken by the banks themselves along with their fellow bankers and other creditors, and sitting with the borrower and coming to any conclusion. So that part is not disturbed at all. That is why I am not able to fully understand why the rating agency did say that this is a very bad withdrawal. This withdrawal is certainly one issue.
Credit negative.
Yeah, there is a negative is need not necessarily because, yes, from one respect it is negative in the sense that banks had an authority. Now that has been withdrawn, to that extent there will be some kind of issue, but otherwise the resolution process will not come into a standstill.
I think what has been withdrawn is the authority of the Reserve Bank, sir. What has been withdrawn is the authority of the Reserve Bank, but can go ahead with the resolution process is at least what we understand. But I think there is a point there in why Moody's may be saying what it's saying, and I think Suharsh alluded to that, because the fear perhaps is no longer there, and hence there is that credit negative assessment that's come in there from Moody's. But Abizar, at the end of the day, in simple English, for the benefit of many viewers who are not familiar with 35A or 35AA, what does this now mean? Where does this leave the restructuring and resolution process? And are we going back to an era of S4A, CDR, and so on and so forth? I mean, where does this leave things?
Well, I hope not. I hope we don't go back to any other eras. I personally think that the Feb 12 circular was a very good circular because it gave a lot of laxity to the RBI and to the banks to do whatever they want. And RBI stuck to their one thing, which is you have to provide for a debt unless recovery is proven.
Yes.
Now with this circular, the intervention is that the RBI simply cannot mandate, and I think after all due clarifications, we will come to the conclusion that RBI can set all rules except take it to NCLT. And except for NCLT, the RBI will say things like, you need to make punitive provisions if you're not able to do it within a stipulated time. Whether 180 days is right or no, frankly, we leave it to the wisdom of most people. I think it's right, simply because if you extend it, there's no guarantee that you'll resolve. But the important thing is that RBI will put punitive measures which are in its own control, which is like increasing provision numbers, or asking the banks to come out with bank-led restructuring plans. So I think the RBI will stick to everything but IBC.
Yes.
As a consequence, but will still put in the fear of God that if you do not do it in 180 days, there will be a consequence. That will happen.
Okay. Well, Shireen, I just want to add one more thing. I don't think RBI is the injured party over here. The injured party here is depositor. For God's sake, it is not RBI's money. It is your money and my money, which has been taken by borrowers, and which, if not returned in time, the banks have a problem. So the problem here is for people like Mr. Bakshi and for other bankers. They had some ability to extract money. So let us be very clear who are the losers if there is no February 12th circular or if there is no power with the banks. The banks are the losers. So Moody's is right in saying that this actually disenfranchises the banker, or at least takes away some of his ability to get back what is his right. And it actually, the silent sufferer in the whole thing is the depositor. I mean, what does it care? What does the RBI care? One governor comes and another goes. It's not Reserve Bank. Reserve Bank is there as a policeman to protect the rights of the depositor. And if you read 35A, that is what comes out. Reserve Bank has the power to give directions to protect banks and to protect depositors. We cannot weaken that under any circumstances. So Reserve Bank better come with another circular or seek the same powers that were available to it under 35A, go back to the Supreme Court. Let us be very clear, we are the losers and not anyone else.
Well, we are still awaiting to hear from the Reserve Bank of India and what they make of the Supreme Court's order, as well as the way forward. This is only an initial discussion. We will continue to decode the implications of what the Supreme Court judgment means for the resolution process, for the Reserve Bank of India, and for you and me. Gentlemen, Lata, thanks very much for joining us on this special edition of Eye on India. Do stay tuned to CNBC-TV18.